Hello, everybody. Jim Malone here, coming to you live on Dallas Trading Floor. Let me just check my mic, make sure that is working here, and it looks like it is good. a little bit of a problem here. Well, the market has bounced back a little bit from its sell-off yesterday, but I don't think it's a good time to start buying once again. But hey. What I've been doing is I've been doing shorting. Let's see, I've got an issue here with Facebook, as usual, of course, because it's always a problem with Facebook. There we go. Okay, so I think we're back, and we're not on Facebook, but hey, we're on YouTube, and we're on LinkedIn. We're on a lot of things. Just wanted to put up here, if you're out there and you want to take a look at this show afterwards, very easy to do. The direct link to today's show is bit.ly/DTF467. So that's the number of the show today, and hopefully you'll get out there with that. Also, just wanted to point out we have a very nice ready list available, and that is it's bit.ly/DTF0075. So let's get into some of the slides. Basically, the Dow has turned positive. The Nasdaq's lower. The energy sector is outperforming still. Matter of fact, some of the stuff on our list is doing the best stuff seems to be in the energy sector. I am currently all in cash right now, but I do have some bear trades, and I want to show you those because they're kind of looking pretty good. We will see kind of how that stacks up. But anyways, this is how the stock market overview is today. We are off on the S&P just slightly. The Nasdaq's off a little bit, and the Russell's off, but the Dow is up. So that's a good thing. It seems as if many of the big boys are moving to the Dow stocks. Just wanted to show you the live chart of the Dow Jones, and we have broken below that very critical 200-day line. We did have a bounce up today, and then we kind of bounced back here. So we seem to be getting some support right about 34,000, just a little bit above that. Currently, the S&P, the Dow Jones is at 34,296, which basically means that it's getting some support right at that 36,000 level. Let's look at some of the other indexes, and the ones I want to really focus in on, of course, is the Nasdaq, and that is where most of the tech stocks are located. The Nasdaq Composite, as you can see, it is still bleeding, and it's very, very well below that 200-day line. Now that is the black line there. That is your 200-day moving average. It's fallen below that. It pulled up a little bit yesterday, right at the close, but it's closing lower. And this is what they call a dead cat bounce. It's coming down and it's moving back up. So not really the greatest thing when it comes to playing the market. Not a good time to be long stocks. Better to be kind of short them, but you want to be short in a very kind of a very specific way. Here's what I'm going to show you a little bit on the fear. Well, this is the bulls versus bears, and with this one, basically what's happening here is that normally the overall in the overall market, the bulls always usually outnumber the bears, but the number of bulls has been coming down and the number of bears has been going up. If we get a crossing like this right here, then we're in trouble. I do think we're going to have a little bit of a pullback here. Who knows how long it's going to last, but it could go down 20%. Here's some of the option plays that I have that are out there that I've been able to put out. And I think that you might be interested in some of these option plays as they stand. Not all of them, but this is one I did on Beyond Meat, and of course, Beyond Meat is not smelling too good, so it is going down in value. But the great thing is when Beyond Meat goes down in value, the value of this trade goes up. The Beyond Meat is currently at 61.30. And that should put us very much right into the money here, into this green zone. So we're looking pretty decent on that. Hopefully, it will continue down below the numbers, and we will see some nice movement on that. Also wanted to show you the spread that I have on Delta. You can see we started out here just a few days ago at when Delta was at 38.94. It's currently fallen to 38.64. Not a whole lot, just a few cents, but that is moving into the green zone nicely as well. So as the price of Delta falls, this spread will become more valuable. This is a bull call spread. Also, we have another one on Teladoc. Now, interestingly enough, we had a big bounce on Teladoc today. I want to show you the live chart, TDOC chart. We may have misjudged this one, but nothing goes down straight. And I want to kind of show you that too. This is the chart of Teladoc Health. We did have a little bit of a bounce today. Let's go over the 30-minute chart, kind of take a look at that. And then after hours, boom, it started to move back down. So we're still basically at about 71 here. When this chart was made, it was basically at 74. So it's come all the way back down. We started out at 67. It's now at 61. So we're once again on that downward trend with Teladoc Health. So that's kind of what happens a lot of times with these trades, is that you'll think, oh my goodness, we're done on this, but then you look and you see, oh well, okay, well that's obvious, it's adjusted there a little bit. Let's take another one here. This is with Teladoc, of course, and let's go to Exxon. Now Exxon is one of my only bull trades right now, and Exxon has been doing well in the market. Currently, it's moved up it's moved up into this green zone. Of course, this is where we make all the money. So let's look at the live chart for Exxon Mobil. Symbol is XOM, and I'm going to look at the daily chart here, see how it closed, and it definitely closed up. There's a lot of flight to safety right now, so that's why this bull trade works. As the stock goes higher, the value of the trade goes higher as well. It's got a relative strength, believe it or not, of 97. This one is the only real bull trade that I have. It is a bull put spread, and it's moving up nicely as well. So that one is looking pretty decent as well too. So also wanted to show you, if you are interested in the brand new watch list that we have out. This is a ready list. It's a very short ready list, but it has some good stocks on it. I wouldn't say buy these right now, but when we get a follow-through day, that's where you want to start. So you can easily get this list just by going to this address, https://bit.ly/DTF0075. So 0075 is the one you want, and that is the free stock list. So thanks everybody for bearing with me on that one. We have a number of questions coming in here. Thank you for holding on. Let's see what we can do here. All right. So the first question is, hey, Jim, it seems that a lot of oil stocks are up today. Any of the stocks you recommend buying right now? Well, that's a good question. Let's take a look. What I want to do is I'm going to go over to the list here that I was talking about, and this, of course, is the list for the spread trade. So let's go over there and look to kind of see what we're seeing here. This is actually available. You just have to go and let's see if I can pull this one up. All right, now this is I was in the wrong thing. Sheets I need to be in. Well, I guess that's correct. I guess that is correct. Let's look at this is going to be ready. The ready list. Let's see if we can come up with the ready list. Let's see if I did that. No, special edition. Wow, Kazawi. I am. Oh, okay. Is this the ready list? Let's see. No. Gosh, let's see if I can go get this one. Don't seem to be having good luck today on this. Too many things going on. All right, so let's see if we can find this out on Bitly. And I use this as a link. I use this link shortener because it helps me keep organized, hopefully. So yeah, this is the list. And let's see if we can go over to that. Let's see if I can make that work. All right. All right, let's see if I can do that. I have to put in my name and address. this is going to give us all the ones that I was putting up there. So let's take a look at the ones that we are looking at. All right, so there we go. So there are two stocks that I am kind of interested in right now. One of them is Continental Resources. Now, I wouldn't recommend buying this one right now, but this is on the rest. The other one is PDQ Energy. CLR is the symbol for Continental, and then PDCE. So let's look PDCE. So let's look at both of these and take a look. First of all, let's look at CLR. This is Continental Resources CLR, and let's see if we can pull that up. All right, this is Continental, and you can see this has a beautiful cup with a handle. It's right at the buy point right now. I don't know if I would buy this one just because the market is so screwy right now. We did have an update today, but that doesn't necessarily mean we're going to have an update tomorrow. So be very careful. Be very careful. The Nasdaq is down significantly at the close. So we got to be kind of careful on that. That's part of the reason I have so many of these bear trades on. So I would be careful about buying this, but these lists are available, and I kind of just wanted to put it out there by going, and you can get access to these lists easily. Just go to https://bit.ly/DTF0075. You have to put in your name and email address. That's so I have a link back so I know that you have the list. But that gives us some things to look at. This is one of the oil companies that I definitely like a lot. Let's take a look at the let's take a look at the checklist. Checklist is excellent. The only thing it's failing on is EPS rating. It's an 89 checklist. Very, very good. Technically, it's looking very good. We're within approximately 5% of the 10-day line. That is a good thing. A lot of strong buying on this one. I definitely think that you could possibly nibble on this one. I'd probably go in with a half position on this Continental Resources. Definitely one to look at. Now, another one possibly, and this is another possible oil stock that you might want to look at, PDCE. That's also on my ready list, PDCE. Let's take a look at it really quickly. This also is looking very good. Not quite as good a formation as the Continental Resources. It's in a consolidation base, but it's looking very good too. It's right below the buy point. The buy point on this one, $59. Now, do I recommend buying this right now? Well, I think that you could possibly start nibbling, but remember, the market is in a downward trend right now, so we have to be extremely careful buying stock right now because it is in a downward trend. So, we just don't want to fight a knife. We just don't want to fight a falling knife. So I'm putting these out really not as buy recommendations, but you want to watch these because when these come out, when we get a follow through day, this is where it's going to be very, very good. We're 3% below the pivot at 59. So this one is good too. So two symbols that I really like in the oils. I would not necessarily recommend buying them right now, but if you do buy them in relatively small. Buy them a half position. Of course, what a half position is if you think of your it's about a 6% commit, a 6% level in your account. So CLR, I definitely like that one, and PDCE, I also like that one too. Great question, and definitely download the watch list because that's going to help a little bit in terms of building for the future because we're going to have a fall through day. Jim, dollar cost averaging is a good idea for long-term growth. Absolutely not. I do not like dollar cost averaging. The reason they put it out there, let me explain a little bit about the way the market works. I don't think you should buy. I don't think you should do dollar cost averaging. The only thing you should do dollar cost averaging is with index funds. If you individual stocks, absolutely not. Do not do dollar cost averaging. It is not a good idea for stocks. Now you can do this with mutual funds, and you can do this with index funds like the QQQ. But right now, the market is in a downward trend. We don't want to catch a falling knife. We just don't want to do it. You don't want to buy in the dips here. CNBC and everybody else is going to be telling you, buy the dips. Oh, it's such a great value. Basically, that's a cover for the big boys will be getting out of the stock while at your expense. So I would be very, very careful on dollar cost averaging. The only thing I would recommend it on, and this is very, very limited recommendation, is on some of those index stocks like the Spider, like the QQQ. But even now, I don't think you want to do that. So I am not a fan of dollar cost averaging. And I know that for longer-term growth and here's the thing: when people lose more than 7% in a stock, they become "quote unquote" long-term investors. Don't be a long-term investor. I've seen this a million times. If you're down more than 7%, and I keep putting this out every day, but you got to follow this rule because you got to maintain your capital until the market it moves into a confirmed uptrend. So if you're down more than 7%, on any of your shares, please consider selling, because the market will come back, but it's going to probably pull back. It potentially as much as 20%. Now I can't give you the hour and day of it, but right now the market is looking very weak, and I think it's going to pull lower. If you're down 7% on any of your positions, please consider selling them. There's ways to make money in the market that don't require what I do. I'm 100% in cash, and basically I'm doing these spread trades, these short-term trades, where I make money as the market goes down, as the stock goes down. I have one on Beyond Meat. Beyond Meat is probably going to go down. It's going to make money as it goes down. I have one on Delta Airlines. It's going to go down. Many of these things, I put them out there. If you're on the Action Trade Alerts, and by the way, if you want to get firsthand information on these, there is an easy way to do it, and it's just to consider joining our Discord room, and you can get information on that just by going to www.Dallas Trading Floor. So, not to beat a dead horse, but if you're down more than 7% on any position, sell it. Wait for a better time to come back in. All right, very good question. Hey Jim, my entry point on Microsoft is 274. Is that a right entry or not? What is your suggestion on the entry point? Good question. Let's look at Microsoft. Microsoft's been pulling back. It's a great stock, but it's trading below. And I want to show you this. And this is kind of a hard thing to look at, but right now Microsoft is trading below the very critical 200-day moving average. This is black line here. Okay, this is the black line. It's gotten a little bit of support there. Your entry was 274. Right now it's a 274.06 in after hours trading. It's off $14. The question is, will it rally? Here's the thing. Looking at this chart, it's very unlikely to rally past the 10-day moving average. And right now, the 10-day moving average, because we're in a downtrend, the 10-day moving average is 303. If this thing moves up to 303, I would consider selling it. Also, you might want to consider putting a stop loss in. I would put my stop in at 275. Currently, no, I'm sorry. I would put the stop loss in right about here at 276. So yeah, you're already in the. Put in a stop loss at 270, because probably this is going to trade down tomorrow. It looks like it's going to trade down. So put your stop loss in at 270, and if it moves up to 303, I'd sell it into strength. So I don't necessarily think this, no offense, but I don't think this is a good entry point. We're in a downward trend. So I think that you need to possibly put in a stop loss for Microsoft at 270. And hopefully that will if it pulls lower tomorrow, which it's looking like it's going to do because of the way it's trading after hours. It's down 5% after hours right now. So put in your stop loss. You're not going to be able to do it in the after hours, but you want to put in your stop loss on Microsoft at 270. And that's going to probably help. Okay. All right. Microsoft tagged despite their good. Any comments? We're in a downward trend. The market is in a downward trend. Anything is going to look, and nothing is really going to do very, very well. That's why most of my trades are bear trades. Let's go over to a really weak stock, Peloton. I put a I put a let's see if I want to see if I put in a I put a bear trade on this one today. Let's see. Well, it's not going to show my notes. Beyond Meat, BYND. I have one on there, so let's take a look at Beyond Meat. See if it'll show me the. It's not showing the. Anyways, so what we have now is almost every stock is going to be pulling back. I have bear trades that actually make money as the stock is going down. This is a really good example of a weak stock. Beyond Meat. I also have one on Peloton and Delta Airlines as well. So there you go. So we are in a downward trend. So that's the thing. Even the strong stocks aren't going to hold up very well. This is another reason why I consider selling your product into earnings, before earnings. The aftermarket charts on S&P, yes they are. Yes they are. We're going to have a nasty downturn tomorrow. And it's not going to be pretty. It's not going to be pretty. But remember, if we're in cash, we'll be fine. So we'll absolutely be fine on that. All right, can we buy UNXY calls? I wouldn't do that, Samuel. I would not do that. But let's look at it anyways. You don't want to be buying calls in this market. You want to be selling puts. You want to be selling spreads. All right, let's just take a look. All right, this is the ProShares VIX short-term. Boy, I wouldn't do this. I mean, you could do that. You could do this. There might be a pop on this, but oof, you could get hurt on this one. I'd be very, very careful about this. The problem isn't. I'd be very, very careful on this one. If this gets a cover, this will wipe you out. I would not recommend this. I would not recommend this, unfortunately, Sam. I just don't think it's a good play right now. All right, Tesla earnings tomorrow. Any thoughts? Absolutely. I think Tesla earnings are going to be great, and I think the stock probably is going to hold 900. That's my guess. I'm totally out of Tesla. I got out. Basically, I was stopped out at 980. That was sort of my line in the sand. I've been out since 980. It's at 906 right now. It did come back way down. There is support for Tesla at 800 right here. There is support. So that's definitely there. But do I think when I think it's going to happen? I think if it's a good earnings report, it will react positively. But I don't expect this thing to move up that much. It's just because the overall market right now is just not that good. The only thing it's above right now is the 200-day line, and we are 8% below the 10-day line. So the best I think we can hope for is a close above that 10-day line, and that's basically right at about 1,000. So I do think there is some support at 1,000, but we will see how it trades. Right now, the market is it's punishing everything. So I think Tesla's going to have great earnings, and I don't think it's going to make a difference all that much, unfortunately, right now. Okay, S&P 500 and Nasdaq charts look horrible in the after hours. Let's take a look at the Spider. This is the ETF that tracks the S&P 500, and I want to take a look at that in the after hours trading. This one does trade 24 hours a day. This is the Spider. It does trade 24 hours a day, and it seems to be down in the after hours. This is not a good sign. And it's below the 200-day line. So I think we're going to have a pretty nasty day tomorrow. That's my guess. I think my bear trades probably will do well, but I think everything else is probably not going to do so hot, unfortunately. I wish I was more. I wish I was more encouraging. What is a fall through day? This is a great question. Well, basically what happens, and I want to kind of just read you the description directly from Investor Business Daily. We don't really want to move back into the market until we go through a follow through day. So what I'm going to do it's put this up on the screen so we can kind of, everybody can kind of see it, because I think it's really very, very, very instructive as to kind of what's happening. Okay, so basically we have to have 4 attempted up days into a rally before we get a follow through day. Okay, so we had 1 attempt today. That means it's got to close higher. So what is a follow through? It confirms an uptrend on day 4 or later of an attempted rally. We had an attempted rally today, but the close, was not on the Nasdaq, was lower. So let's go back to the let's take a look at the indexes and how they and how they fared. So basically, what the situation was with the Dow is we were up on the Dow, so we have potentially a follow through day on the Dow. Now this is the first day of attempted, so we don't have one on the Nasdaq and we don't have one on the S&P. So they're both down. So it tried for a follow through day here, but it didn't have it. So we need 4 up days. We need 4 up days in a row on the indexes. It's either the Nasdaq or the S&P. Unfortunately, today we were down on both of them, so we did not achieve a follow through day. We have to wait until we have 4 up days on both indexes consecutively. So we're not there. So we're in a downward trend. That's what that means. That's an excellent, excellent question. That is what a follow through day is. Now, if you're on the action trade alerts, I will indicate to everybody, I will put out an email if you get on the action trade alerts, DallasTradingFloor.com, when we achieve that follow through day. But remember, it's 4 days of upward action on both the S&P 500 and on the Nasdaq. And unfortunately, we didn't get either today, and that was unfortunate. So we have got to start the count all over again. By the way, they have to be in a row. So if we go 3 days up and then we move 1 back, the count starts over again. So right now, unfortunately, we are not in an uptrend. We are in a correction. Expect further damage. And that's just the way it is, unfortunately. AMD, let's look at AMD on the chart to see kind of if I can get a chart on AMD. I think, there's been a lot of damage on the semis because they had been such a good area, and they have been damaged. We did have a pullback all the way to the 200-day moving average. So this is unfortunately a damaged stock right now. I wish it wasn't. It's a great stock, but let's look at the technicals. The only moving average that we're above right now is the 200-day average. So therefore, this is not a good situation. It is in a downward trend, and it does look like it's getting a little bit of support at the 200-day. Hopefully this can hold the 200-day line. If not, then it will. The next level of resistance for this is going to be basically at about 95 right here, because that is the former former pivot. So I do believe we are, hopefully AMD will hold. I would not be a buyer of AMD here. I just wouldn't. I don't think it's prudent, not when the market is pulling back like this. All right. The question is, how low can AMD go? Well, basically, I think, I think we can, on AMD, I think we could easily move down to 95, easily, based on this chart. I think that there definitely is some support at 95. That's kind of where I see it. Now, if I was in an upward trend and I wasn't so close to earnings, I might be tempted to buy it here, but I will not buy it when it's not in an upward trend and we're pulling back like this. So my whole thing here is not to buy this. Unfortunately, we're in a downward trend. All right, I have been neglecting the people on TikTok. Let's look at NEO. Now, this is not going to be pretty here. I just want to reiterate this because it is not in a good situation. This stock, by the way, is currently trading at $23 a share. It was trading back in December at about 60. So this has lost 2/3 of its value. I would not buy this thing. Yes, it is true on the fundamentals. The sales have been going up, but sales alone don't make a difference when you're not making a profit, and that's the case here with NEO. So NEO is just, if you're down more than 7% on this one, please sell it because it's probably going to go lower. And I just hope that that's not going to be the case. You're not going to get stuck with it. I just kind of want to show you what a correction is. A correction is equal to more than a 10% drop in an index like the Nasdaq. We definitely have had that go on here. So with NEO, I think that the best course of action right now for NEO, if you're down more than 7% from where you bought it, is selling it and just waiting and seeing if it comes back. I just don't think you need to bleed your capital. Ford's a little bit different story because Ford is in an uptrend, unlike NEO. So Ford is definitely in an uptrend. It did pull down below the 40-day line, but it is still in an uptrend. Now, the question is, would I buy it here? Well, actually, this is one of the better stocks out there in the automotive space right now. So, but earnings are in 9 days. I think I wouldn't, if I was in the stock, I wouldn't sell it. But if I wasn't in it, I don't think I would be in it. I just not right now. The market is telling us that it's, we are in a correction. So when you're in a correction, you don't want to buy. You want to wait, get into cash, wait for that follow through day. The follow through day will come. The follow through deal, we are 4 days away at any time from a follow through day. But remember, the follow through day is this. You need 4 up days in a row consecutively on 2 major indexes, the Nasdaq and the S&P 500. We're not there yet, unfortunately. Unfortunately. Let's take another question. Thank you, everybody, so much for holding here. Let's talk it with Tony. Tony, thank you very much. Check out RILY. I think it's good potential short. Excellent. Thank you, Tony. I like when you're on the short side. RILY. Let's take a look at that. That might be a good idea. RILY. Let's see if we could short that. Okay. B. Riley Financial. That's the company. Oh, yeah, absolutely, Tony. You definitely are onto something here. Let's take a look at this chart. I think that, you definitely have something. This is below the critical 200-day line. I like to see that on the shorting. It's not really a head and shoulders pattern, but this is sort of a shoulder. This is sort of a head. And I do think that we may get a rally back to, the 200-day line. That would probably be the place to short it. But let's look at the weekly. I think it's a little too early to short this one, but I think you definitely is a watch list for shorting, because what's going to happen is we're going to get a rally probably up above 60. And then once that happens, we're likely to get the potential of a short. Now, I like to see, I think we need a little bit time on this one. I want to see I want to see the 21-day line come down a little bit, because what's going to happen typically is that that's the place to short it. Let's take a look at PayPal. I want to show you why I shorted PayPal. And I have covered this short, by the way. This is a classic pattern. It goes below the 200-day line, and then the 21-day exponential, that's this green line, forms kind of a division. And then what will happen is it'll try to rally to that line, and then when it loses the ability to rally to the line, where you short it is right there where it loses the ability to hold that line. This is an example of PayPal. And with PayPal, what I did was, right when it was here, I opened a bull, a bear call spread. Let me see if I can bring up that. Let me see if I can bring up that slide. It won't be totally complete because I don't know if I've updated it, but let me look at the PayPal slide for the shorting. This will give you an idea of sort of how I short. I don't typically short with the shares just because it can be more dangerous. I like to use puts to short. So PayPal is one that I did I did show, and this is a bear call spread I did on this one. So let's see if I can load this in and see if it'll come in. Yeah, it's processing now. Let's see. Okay, this is to kind of give you an idea of kind of what I did with shorting. So let's see if I can. Okay, there we go. So I'm going to add this to the stream. All right, we're going to go back one more slide. Okay. Let's see if we can go forward here. Yeah, this is what I did. Okay, actually, it dropped, and I didn't even update it. It dropped all the way down here. I think you can see it to 162. It's now 155. But when I shorted this one, we started way up here, and then we came way down there, and I just closed the trade for profit. I think I have no, I don't have the chart in there, but basically what we're looking at when we're doing this kind of thing, and the reason I'm showing you that one is because basically what happened was we came in right about here, and then boom, it went down. That's where we shorted it. So what we're looking for, to be long story short, Troy, what we're looking for is we're looking for a close below that 200-day line. We're looking for it to sort of try to come up to the 21-day line, but not be able to get above it. When it does that for the third time, and it isn't quite exact on this one, sort of did this once here and not really, and then twice, and then three times, and then at the third time, that's where I shorted it. Typically, it takes 3 times for that. So what I would do on B. Riley Financial, I watch this, wait for it to come down to the 21-day line and rally 3 times, and then I would short it. So that's a long story there. All right. Do you also trade over the OTC? Not as much. I really have my hands full just with the shares, but absolutely good stuff. Good stuff too. Absolutely good stuff there. Hey, thank you, Francis. I'm not trying to rag on anyone. This is a tough market to trade. We're in a correction. We're down more than 10%, and I think we're going to go down about 20% before we're going to get support. Now, you can make money in this kind of market by doing shorting. And what I mean by shorting, I don't actually do the shorting. I use bear call spreads or bear put spreads, and I do put them out all the time. Try to put them out all the time. All right. What do you suggest a reverse leverage ETF? No, not now. Not right now, because we haven't bottomed yet. There's a time for a reverse leverage ETF. Right now, I don't think it's the time for it. I think we're going to get some here's the reason I don't recommend an ETF like that. I do believe that we're going to get some rallies because remember, the biggest rallies typically happen in a downward trend. We're in a downward trend right now, so we're going to have some rallies that, you're going to see these rallies and you're going to go, wow, I missed it. It went up all this much, and boom, the next day it's going to go down. That's exactly what's happening right now. We had this rally yesterday at the end of the day, and we're down today. So I think tomorrow is going to open up lower. And I'm going to, if you get on the list, and I just keep telling everybody about this, but I'm going to try to put out some trades that will make sense, hopefully, in this environment. And that's easy to do. Just get onto www.Dell's Trading Floor. So let's take the next one. And thank you so much for all your comments. Great stuff. All right. The SQQQ, that's a good question, is a reverse ETF that marches against the Qs. It's a 2x leverage. It is starting to trend up, and that might be, if you're going to do any reverse ETFs, this is the one that I have the most experience with. And we did move, and this is critical. Now, remember, when we're looking at reverse ETFs, we're looking at an upside down world. We're looking in the bizarro world, and in that bizarro world, remember how I don't like to trade anything when it pulls below the 200-day line. Well, when with this, it's reverse. So we start to look at trading it as it moves above the 200-day line. So this is a possible place that we could possibly get into. The problem with these ETFs is that they can snap back very, very hard. As you can see, we're just starting to move up. It's up a lot in after hours, 6%. See how this one opens tomorrow? I would not necessarily recommend a big position in this one, but if you want to get your toes wet, this is definitely one to look at, is the SQQQ. Because if the QQQs go down tomorrow, this will move 2x times in inverse to that. So let's look at the QQQ, and of course this is the this is the ETF that is most the Nasdaq 100. Now the question is it what is the action? What is the likely action on the Qs tomorrow? It looks to me like it is the likely action on the Qs tomorrow is down. So this would make the SQQQs work possibly tomorrow. I don't know if I would do it, but I wouldn't do it with a large position, that's for sure. But it does look like if that is true and the Qs pull lower, which it does look like it's going to happen tomorrow, this one might not be a bad idea because you can see it's inverse to, it's basically inverse to the Qs. Yesterday we had it pulled down, today it's pulled up. And if we look back at the Qs, yesterday we pulled up and today we pulled down. So I suspect we're going to get another leg down tomorrow on the Qs, and that might make the SQQQ work tomorrow. But here's the thing about it, Amir, be very careful. Close your position very quickly if it turns against you because it's a leverage ETF. And a leverage ETF can get you in trouble very, very quickly. You can make money very fast. You can also lose it. So if you do this, keep your stop losses very tight, very, very tight, and just move them up and just be very, very careful. But yeah, I think it probably will move up tomorrow. That's what it's looking like to me with the charts. Hi, thoughts on Nvidia? All right, let's take a look at Nvidia. Nvidia is one of the best. I mean, it is the AI leader. It has a bad chart only because the whole sector and the whole market is turning over. Now, normally, that when a market is ready to turn, these long-term leaders, these leaders like Nvidia, AMD, these are the companies that in an uptrend, these are outperformers. When it's a downtrend, these are the last basically to turn over. And definitely we've had that happen here. Yesterday, we pulled below that 200-day moving average. We pulled above it a little bit, but we are in a severe downtrend right now. I do think we're going to go lower on this one. This potentially, though I don't know if I have the cojones to do it, this potentially looks like a bull put spread. Okay, why? Because it's very widely held. It's a great company. It has support right here at about 195. Currently, it's at 216. So there's about 20 points between there. It does look like this is probably going to go lower tomorrow, but I suspect based on this, it's been down 1, 2, 3, 4, 5, 6 days. I think we're going to trade up a little bit tomorrow, and then if it trades up tomorrow, I may set an alert on this to do a short because it probably is going to pull lower, and I think it possibly is going to pull below that 200-day line. Now, the 200-day line right now is at 219. We're at 216, so we're below the 200-day line. It looks like this is going to open. It's going to open, and it's going to probably move lower. So expect Nvidia to move lower tomorrow, at least in the short term. And this might be a very good. And I'm going to put this on my list. NVDA as a bear put spread. And I think this one might be a very good candidate for that. All right, what program do you use? I use 3 brokerage companies. I use Charles Schwab, Fidelity, and TD Ameritrade. I like TD Ameritrade the best. The software that you're looking at here I think is the best software that I've ever come across. It has some issues, but it has pattern recognition and everything. This is MarketSmith, and it is created by it's created by Investor Business Daily. One thing I love about it is it has pattern recognition in it. This is actually this is how cancel and trading works. It actually has the ability to use AI to find these patterns. Now, when I did this before back in the day, I could only maybe do 15. On a good day, I could do maybe 15 charts and identify these. I can scan everything now with AI in this. I love this program. I don't get a nickel for use for it, unfortunately, but it's called MarketSmith, and I think it's very, very useful. It's not the cheapest software in the world. I wish it were cheaper, but very, very good software. So that's what I do use. All right, let's look at SBNY. SBNY and see what we got there. And see if we could add that to the stream. This is Signature Bank. Even you would think this is one of the best performing sectors. This is Banks Northeast. This is 9 out of 197, so this is clearly in the top of the market. But even this area is having trouble. This is why the overall market is very, very weak. Let's kind of take a look. And I want to take a look at what sectors are performing and which ones are not. And I'm going to go down here to the sectors. There's in Cancel trading, there's 197 different industry groups that are identified. And I typically like to look at which ones are the best performers. So what I'm doing here is I'm sorting this. Currently, oil and gas, Canadian, now there's only 5 stocks in this, is number 1. Believe it or not, and this is incredible, hard to believe. Coal's number 2, and oil and gas, international E&P. This is where Oxy is. That's number 3. Look at this. There's all oil and gas. Look at that, all oil and gas. So if you have to be in a stock, if you have to be long, you want to be in the oils. Now, I do have some oils for you to take a look at. So I'm going to jump on over here to the ready list and look at what we can see that's in the oils. The one I like here is this Continental Resources. As you can see, let's see if I can pull this up. So possibly instead of Signature Bank, you might want to look at this one. It's called Continental Resources. It's off a tad after hours, off 18 cents, but it was up today $4. It's right at a pivot. This is a cup with handle formation. It's 99 relative strength. That means that it's in the top 1% of all shares right now. This is Continental Resources. This is one I do like, and I may be buying this one tomorrow. I don't know. I don't like buying in downturns, but it has a strong checklist. If you're looking out there for a stock that you could buy, if you have to buy a stock, you want to be buying in that oil and gas area because that's where the strength is in the market. I want to go back to the rankings here because this kind of this is like the X-ray. This is going to show us what is working. Oil and gas, coal, oil and gas, media periodicals. Interestingly enough, there's only 3 in this, so it's a very small group. U.S. E&P. This is where Continental Resources is. That's 56 companies in there. Integrated. This is where Exxon is. I have a bear. It's the only bull spread I have right now. It's on Exxon Mobil. It's in this oil and gas integrated. That's in the top. You see, we're looking at the top 10 areas. We're only really looking at that. So you definitely have a good, Banks Northeast. That's number 9. So that's a good one that you're looking at. SBNY is good because it's in Banks Northeast. So that it makes the smell test there. But I do think that you could do better by being in oil and gas. That's just my opinion on that. You could do better by being in oil and gas. It's a little bit stronger category than the banks. All right, Microsoft fell off the cliff despite good increase. Is there something? I think there's actually, I did have a short on Apple. I want to show you a short that I did have on Apple. If you've been on the Action Trade Alerts, I kind of want to show you this. I want to show you this one. Let me pull it up here. I want to show you this one that I did have on Apple. So let me see if I can pull this up. This is one that we did have, and then we did back. Let's take a look at it. Apple did close this though for a profit. So let's take it. This is a bear call spread on Apple, and we did open this a few weeks ago. So let's take a look at it. Just processing. Takes a bit of a time for. There we go. So this is a spread that I did have on Apple a few weeks ago. Basically, this is the write-up on it. We did open this on the 13th, and we did see some weakness. And this isn't currently updated because it's saying 158. So what I want to do is I want to go back to the chart to take a look to see kind of where Apple is right now. It's at 157. Right now, Apple is at 157. As you can see, it's moving down. So this is potentially, you could still even short at this point. I may put another short on it because I do think it's going to move lower. I want to see it trade up a little bit, but I could see this easily moving down to the 138 level easily. And the way to take advantage of that, of course, is with either a call or a put spread. This is a call spread that I have, and as you can see, it's in the money right now. And I do think that this have more information on. By the way, I also cover how to put a stop loss on your trade on this particular one. But I definitely think Apple is moving lower. Is moving is moving lower because the whole market's moving lower. It's not just Apple. All right. Thank you so much for bearing with me. Let's look at coin. Of course, this is Coinbase, and as you know, the market for Bitcoin has just kind of fallen, and that's because what's happening now is the market is moving into cash. I know this sounds very strange. Everybody tells you that gold is the greatest inflation hedge, but believe it or not, the best inflation hedge, and I know this sounds weird, is cash. So that's why people are moving into cash right now. So let's take a look at Coinbase and see how it's trading. Unfortunately, I wish I had better news for you. It's traded. It's still a little bit. I'm going to reactivate the and see my line. We are in a downward trend on this. We're still above the reversal line, which is good, but we're in this downward trend at 183. I suspect it's going to go lower. This may be a very good bear trade as well. It does look like it's not going to be able to hold. It IPO'd at 250. It's currently below the IPO. That's not a good sign. I do think that it is going lower. Now, on this one, and I just want to be, if you're long on this stock, please, 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 if you're down more than 7%, please close your, try to close your position and wait, because this one probably will come back. I mean, it's not like Coinbase is going to go out of business, but a lot of times these shares get hammered, and there's nothing you can do, even with good numbers. So here's the thing on this: if you're down more than 7% on this one, I'd consider selling it right now, just because we are in this we're just in this downward trend, and that's the only really way you can really view it. All right, let's take a look. I'm almost out of time here. Let's look at the XLE. This is a great one. This is a Spider Select energy, and this one has been doing fairly well. I mean, if you have to put money into the market, and you have to put money in the market, this is a good one to go, because this is the XLE. It covers those E&P companies that we were talking about. That they're so powerful right now in the market. It's about the only thing that's working. And it's definitely working. It's up after hours. Not a lot, 2 cents, but working very, very well. The XLE, it's a little bit extended here, but remember, this is a ETF. This is not a single individual stock. So the buy rules are a little bit different with the XLE. I think the XLE is probably a very, very good defensive move. Now, would I put everything in it? No, but I do like it. It's above all the major indexes, the 200, the 50, the 21, and the 10. It's in a good place to buy it. It's within 5% of the 10-day moving average. Not a bad place to buy it. So this is about the only one that I can say you could buy today. I wouldn't buy a lot of it, but if you got to be in the market, the XLE is a good place to be. So thank you very much for that, Samuel. Great observation. Thank you very much, Mr. Jeet, too. I appreciate it. All right, and unfortunately, thoughts on B falls below 20K. Well, I do think that there is some support. I may be a buyer of Bitcoin, but I want to be down around 8K before I look at buying it. Let's look at the chart for let's see if we can come up with a decent chart for Bitcoin. So let me open up another window here and pull up the Bitcoin price. And I want to take a look at it. It definitely has fallen off the cliff, because when it gets, it's definitely fallen off the cliff. But the question is, can it rally? I think 30,000 right now is sort of the, sort of where we're going to get some support probably for Bitcoin. So let's look at it. Yeah, we almost came down to 35. Let's look at the last month. See, this is not the kind of chart you want to see. It bounced right here at 35. That's really interesting. Look at that. It's support at 35. Let's look at the year-to-date. Boy, the year-to-date has not been, it's not been good. Let's go the 1 year chart. I'm going to kind of look at that. Yeah, see, this is the critical level. It's 30,000. We're not there yet. We're trading up a little bit, but I do see this downward trend. So if it starts getting at 30,000 and it can hold 30,000, that's where I might be interested, possibly getting in. But right now, boy, it's not a good scene with Bitcoin. Well, thank you, everybody. Thanks again. If you want to get on the Action Trade Alerts, super great, because I do put out stuff. I try to put out as much as I can. Right now, we do have a kind of a cool thing. It's the ready list. Not a lot of things on it, but definitely when we get that follow through day, that's where you want to start trying to potentially move into it. You can easily get that ready list super easy. Just go to www.bit.ly/DTF0075, and that'll put you on the list, and then we'll get everything out to you. If you're looking on TikTok, I broadcast every day at 4 o'clock, and I try to go, it's usually about an hour, and try to answer everybody's question. We're in a downward trend right now. You got to be extremely careful in the market. I wouldn't recommend initiating any new positions right now, but I do think that you need to be building the watch list. A great way to do that, of course, is to start with my ready list, which is available, and you just have to go to the to my profile, click on the link, first and last name, and then we'll get you set up with the ready list. This is where you want to start looking for targets when we get the follow through day. We will get the follow through day. That, remember, a follow through day is 4 consecutive up days in a row on both two major indexes, the S&P 500 and the Nasdaq. We tried to have that happen today. We didn't get it, so we need 4 follow through days. We need 4 days to have a follow through day. We're not there yet, but if you're on the Action Trade Alerts, believe me, I will notify everyone the minute it turns. We're currently in a correction. You want to stay in cash. Now, there are opportunities to make money in this market, and I've been trying to tell people about the call spreads and the put spreads that I'm doing. These make money as the stock goes down. They're not necessarily for everyone. It's like an intermediate trade, but it's well worth it, because instead of just sitting there on your hands waiting for something to happen, you can be much more proactive and make money in a downward trending market. I do believe we're going to pull back probably as much as 20%, but who knows? We won't know when to get back into the market until the follow through day. So until tomorrow, everybody, thanks so much for watching, and I hope everyone is doing well. Please be careful in the market. Try not to don't believe the CNBC people. I mean, I'm not against them, but look, they're paid by big companies to make sure their stock moves up. The CEOs are paid a lot of money on stock performance. Many of these stocks are going down. People like Kramer are going to send there saying, buying the dips, buying the dips, buying the dips. And then when all those retail investors come in, they're going to come out and they're going to move out the back door, and they're going to let you hold some bag. Don't hold bag. Right now, you want to be in cash, waiting for that fall through day. I will definitely share with you exactly how I'm trading it, but be careful right now in the market. You want to be in cash and possibly short. That's all you really want to be right now. I'll be back tomorrow at 4 o'clock. Thanks everybody for watching, and please, 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 this is very important. I'm learning more stuff about the whole YouTube thing. I need you to like the show so that it gets out to more people. So please like the show. If you do, that a lot of people will see it. Maybe we can help in this time of pullback, because it's going to be tough for a lot of people. A lot of people are going to be tempted to come in and buy, and then the stock is going to go down, and then they're going to lose a whole bunch of money. And it's so easy to do this, but it's not. But we can protect against that. So until tomorrow at 4 o'clock, thanks everybody, and happy trading. And I think I have one last thank you very, very much, everybody. I'll be back tomorrow, and I just really appreciate all the questions and everything that you're saying. Please protect yourself in the market right now. We are pulling back, and it is a difficult market trade, but believe me, there's money-making opportunities out there, and I'm going to try to share every one that I possibly have with you as well. So I will see you back here tomorrow and about 4 o'clock, and stay safe, everyone. See you.